Okay, so this isn't the way we wanted to start, but it's not a bad way to start, especially considering that we were going short on Thursday. We did protect ourselves in a number of different ways here when it came to our trade, but everything that we were looking for on the chart wasn't necessarily happening, but there's a reason why. A lot of people talk about the difference between technical analysis and fundamental analysis, and what we're going to be able to do is give a real example on how the fundamentals on Thursday could have completely gotten you wrecked if you weren't looking at the technicals. When we dive into this, we're going to show you the execution step by step, what we did, what we were looking at, and what actually happened in the market for us to just make a measly 128 on the day. But at least it's something, and at least we didn't lose money in the account. And if you're going to be a trader, your number one rule is to protect yourself, protect your account. And we did that successfully. Really big major days are going to happen for us, but Thursday wasn't that day. And then what we did on Friday was just sort of gauge the market, watch the market. We weren't too interested in trading, but we did see a couple of opportunities starting to sprout up, but they really weren't there to materialize in the way that we wanted to see them. So we thought it was important to sit on our hands and just watch the market today and get a better anticipation of what could happen going into the weekend and on Monday. All right, so let's cover these moves. Let's dive into it, man. Day one of the 25K to 50K trading challenge. It's the long and short. Let's get to it. Yo, welcome to the long and short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques that won't get you wrecked in the market, as I'm sure you guys can see. Now, what we're going to cover here is day one of the 25K to 50K trading challenge. We started on Thursday, and Thursday was probably the worst day to start because that was the day that Ukraine got invaded by Russia early in the morning, and the markets, most people were reacting in a negative way to that. The futures were down. Everything that morning just seemed to be negative. Okay. And I'm thinking short on Thursday. Now, thinking short on Thursday would have been a bad thing to do if, in fact, you were putting in positions short before like the New York session kicked off, because once it kicked off, as we all know, Thursday turned into a real barn burner of a day. Like following fundamentals, invasions, etc., you would think that the price would be negative or would be bearish, but we'll show you some things on the chart that actually was showing you that it definitely was due to start to push up. And on top of that, there was a lot of things for price to start to fulfill to the upside that it actually did on Thursday and just sort of sat still on Friday. So before we dive into each move, what we were looking at, what actually happened, the first thing we have to do is actually set you guys up with what we were thinking, our bias, our understanding of how we viewed the market that day as we were going into the trades. All right, because just showing people levels and just showing people, I guess, even if you're just showing people executions, if you're not really giving people your thought process behind it, then you can't explain to them fully exactly why you were thinking the things that you were thinking and why you had to react in certain ways as you were taking the trade. So we consider certain things before we even go into the charts, right? So market factors, for the most part, macro perspective, okay? Now, everyone knows the FOMC meetings coming up March 15th and 16th. Everyone knows Ukraine got invaded. From my perspective, the market has a lot of uncertainty in it from a number of different reasons, okay? BTC is also moving in correlations with equities more than it is with gold. So if Bitcoin is going to be seen as a store of value, this has to change. But right now, the narrative seems to be that Bitcoin is moving in correlation with equities more than it is gold. So this is just background information that we need to take into the market and then take a look at the normal stock market to see what's happening with that. And in fact, if there is any correlation, and yesterday proved that there's correlation directly between what happens with equities and Bitcoin. Okay, so both went up yesterday. So this just proves the case for us. Once we consider the factors, we have to start taking a look at what our outlook is going to be before we actually dive into the chart. So my outlook for the most part, okay, is either neutral or bearish, because of the market factors at play. Thursday, I woke up pretty bearish. Okay, I'm looking at the news. Everything's bearish. Ukraine's getting invaded. Russia's dropping bombs. Everything is bearish, in my opinion. But as soon as the market woke up, everything started taking off. And so I can't let just my idea of everything being bearish make me put in a trade early in the morning and just, hope for the best when the market actually opens up. No, I want to see how the market actually reacts a little bit, especially if it's an uncertain day. There was no telling how bad it was going to get that day. So I wanted to see what happened first hour of the market, okay? And it completely flipped from being sort of bearish on the start of the day to being very bullish. Also, what I was considering was that the commitment of traders was very consolidated, okay? I'm thinking we should be in more of a range-bound movement. The only thing that was really telling me that we could turn bullish is that we were finding bottoms. That's what I was thinking. If we're bearish, how bad is it going to get on the day, right? And will the market rebound by the afternoon? And if we're bullish, right, I wanted to really see some price movement, to confirm that. I'm not going to bet bullish if my feeling is bearish, but I'm not going to jump all in and go, I'm going to put a trade in at this point if I'm not completely sure. So I hope that all makes sense. And this is why we sat on the sidelines in the morning when price first opened up. So we're going to give you this update on every video when it comes down to the trades that we took and the reason why we took them, right? The market factors, the things that are out there that we're considering, and the way that they shape our outlook, okay? Now, when we take our outlook into the charts may tell us a completely different story than what the macro perspective is telling us. And we'll tell both sides of that story with the price action that we saw on Thursday. So let's go ahead and take a look. So we're going to start on the Bitcoin 1 hour chart. And what we're going to do, this is kind of serve two different purposes here. We're going to talk about the moves that were executed so that you guys can see what we did to get in and out of trades and actually what happened in these trades. We did have some annotations up here, but it was sort of a hectic day. So in order for us to really capitalize on what was happening, we had to wipe out all of the different notations, et cetera, et cetera. Some of you may be used to seeing this 1 hour chart very marked up and notated, but once we go into trading, it's less about, legacy levels and really about what's happening right here and now near price. Okay. So what we're going to do is this video, in this part of the video, is going to serve two different purposes. The first one is to cover the moves. The second one is to draw out what we're actually looking for going into the weekend, into next week, and how these levels will be approached, reached, and how we're going to react to them. Okay. So we're going to sort of lay out the game plan, what we're looking for going into next week, outside of classifying what we did to sort of protect ourselves over this very choppy trading day. Okay. Because if you guys have never traded before, just this price action alone, for guys that are veterans, they understand that this is a very, very tight range and level to trade in, even though it seems like it's going up, right? For us to be short as price is doing this, you got to be able to be nimble in a lot of different ways. And we'll show you how we were nimble to actually pull money out of the market going short as price was rising. All right. So we're going to cover each thing. We're going to break this down to a 1 minute to 5 minute chart, so that you're able to understand what we were looking at, okay, as price progressed forward. What we have to do is set the scene first. Now, since we were scalping on this day, we have to zoom out to a 1 hour chart to get the perspective sort of in what was happening leading up to us getting into trades. So this was around, let's say, 9 in the morning on the 23rd, okay? Price pretty much dropped off of a cliff all during the day of the 23rd, okay? And by midnight, it literally reversed course. It found its bottom somewhere around 34,332. So just say 34.5, okay, to be safe. Price found a low here and just automatically turned around. Now, if you wake up the next day and you see that Ukraine has basically been invaded by Russia, okay, 7 in the morning, this is what we're looking at. Price dipping down, okay? Now, crypto market never sleeps, and this is why we love to trade it, because you can be up at 2 in the morning, 3 in the morning, 4 in the morning trading crypto. I kind of watched price overnight, and I went to bed around 2 in the morning, so I saw it was creeping up. And then by the time I woke up, it was around 7 a.m., okay, and I saw price dipping down. Now, at this point, I'm thinking bearish. I'm tuning into the news. I'm seeing all of this stuff on the news about Ukraine being invaded. Thinking bearish. I'm saying, okay, where's the short? Most normal rules will tell you that once price starts to spike liquidity to the upside, okay, it should continue to fall lower. But I noticed two other highs over here that price really didn't reach for, okay? Now, this is on the hour. This is 8 a.m. So I said, be patient. Just be patient. Let's see what develops. I want to see if price starts to range out and create more of highs, more closer to these levels, okay? which it did, but it sort of peaked way above it, which gave me another indication that price was starting to move a bit more aggressively to the upside. Okay. Now, where we decided to really try to take a short was sometime around noon, but we wanted to confirm if New York was actually going to reverse during the afternoon session, because the New York session can reverse mid-afternoon. Okay. Now, lunchtime, it went down, but by 1 p, price started to really rally. So we didn't get the confirmation in the 1 p.m., 2 p.m. hour. So we said, okay, let's just sit on our hands. And this is when price just literally took off. Right at, was this 1 p.m., 2 p.m., 3 p.m., price rallied, went very, very, very aggressively to the upside. Now, if we were just paying attention to the left over here, we would have been able to see that price had created imbalances, pretty big ones, on its way down, okay, over the course of the day yesterday. This is sort of the perfect setup for the bounce, okay? And when price did bounce, okay, if we were just looking for these imbalances here, right, this would have been a very nice trade to take sort of somewhere around 7 or 8 in the morning in the New York session, right? Sort of trading contrary to what most people are thinking, right? You're playing against the herd. That was the play to make on Monday morning in New York, okay? Unfortunately, we didn't make the play. So we had to sit on our hands. And once price overextended, that's when we felt like it was okay for us to start to think short. Now, also notice what we have here is imbalances to the downside, okay? We were thinking that price will probably at least retrace back down to here, okay? And then go for another bullish run. But it just seemed to snake its way easily up. And I think it's really going to try to test these levels again before it starts to come down. But this is not the type of price action that you want to trade in, right? The type of price action that you really want to catch is these last little extensions down before you start pushing up higher. The long was taken there or here, you would have been in really good shape, okay? But trying to take shorts based on a retracement and prices doing this, you have to protect yourself. So let's show folks how we did that. Now, what we have to do is get into the 5-minute chart. It's going to take a little adjusting here, but you'll start to be able to see what we were actually thinking and how things started to materialize. And first play that we tried to take was somewhere around, what is this, 450, okay? So we wanted the New York session to end. We wanted New York to sort of just get it all out of their system. And we did sort of pull the trigger just a little bit early, but in our opinion, this was the proper candle to get on because this was the extension above the liquidity here that sort of closed whatever imbalance was in these candles here, right? So this was the opportune time to take a short play. And it seemed like it was going to work out for a little while because price really did start to dip, but we spiked down here, created this little hammer candle, and then we had a really nice aggressive push up, okay? Now, what we were doing at this point was protecting ourselves with a stop loss placed right ahead of where we entered, right? Because we said to ourselves, this price is going to bounce back on us. We at least want to take something home. Okay, so this is the first play for 80 bucks here. All right, this is the $80 win. So price came down. We protected ourselves with a stop loss that dropped below. Now remember, we're short. Okay, we entered here on this candle. Okay, we see price go short. Once price starts to turn around, what did I do? I took a stop loss instead of placing it above the candle, okay, or up here to wait for price to start to run away against me. I said no. I'm going to take something home. So I placed a stop loss below here, okay? And price just eventually came up, took me out. Now, I wasn't happy with that. Wasn't happy with that at all. And in a way, I said, okay, if price is just simply retracing to try to come back and fill this imbalance here and continue lower, which is a thought process that I probably shouldn't have had at that point. I should just sat on my hands. I said, no, I'm going to enter right here. Boom. So I got in again, okay? Now, at this point, price started to really rally against me, and it started to take out equal highs, and I was thinking, okay, it took out those highs, boom. Let's continue lower, but nope, just snaking its way up, okay? Now, eventually, what happened was it did come back down, but we were sitting in this trade for quite some time. We entered this trade at 18.15, so this is 6.15, okay? The stop loss got hit around 4:25 in the morning. So what we did was we just basically set a take profit right here. I didn't really think that price was going to start to shoot super lower because of the previous price action. Plus, we were going into Friday, and I'm thinking Friday's going to be a pretty dull day. We had that extension. I don't think people are just going to come out selling Bitcoin on Friday, and I sort of proved myself right with that. So if any profits were going to be taken, right, and I had to sit with this overnight, I was going to set a take profit somewhere very close to the low here. And I didn't really think that price was going to dip any lower than this low, so I just set it right here, and price just sort of came down and magically touched it before it took off again. All right. Now, woke up today. All right. Now, this is 9 in the morning. What I'm thinking is New York's going to come back and start to reclaim some of that movement that they did yesterday. But essentially, price just sort of sat still all day. So once I saw that price wasn't really doing very much, same situation. I set the stop loss right in front of where my my entry was. Price came up, took me out, and I said, you know what? Just let me sit still. And that was the proper decision because, as you can see, price just sort of went up and down, up and down, up and down all day. And believe me, guys, this is the worst type of ranges you want to be trading in, right? Let's just take the high to the low of this range. Price is moving about 2.7% in a day, but it's very choppy, and it's up and down, up and down, up and down. These are not the type of trades that you want to be sitting in for any extended period of time, right? So we said, you know what? Let's let Friday play out. Let's see what happens on Saturday, Sunday, going into Monday. Because there's a lot of uncertainty in the market, we kind of just wanted to sit still. So this is why we were only able to pull out, but this much. Okay, so we had an $80 win, $46 win, and the 60 cents win here was actually just price coming right back to take us out from a stop loss position that we just hedged right in front of our entry. All right, so if we're going to take anything, we took 60 cents. That was our sign to sit still. Okay. Now, being patient in the market is just as important as being active in the market. Knowing when to sit still and not be so gung-ho about trading is actually what saved our portfolio today. All right. Now, we could have possibly went short after these liquidity runs to the upside, but as you can see, it was a very short-lived move. Okay. That turned right back around on us, right? Without any real indication besides a grab of these lows here, okay, for us to exit. There's nothing really here that got reached from lower than this point. All right. So we could have sat in this trade and still been sitting in this trade now, hoping for price to fall if in fact we were short. And it's the same thing for long. Okay. If you're seeing these two lows here gets grabbed, okay, you've seen some positive gains and hopefully you did take some gains, right? So if you had any opportunities today, it was to go short from here based on these grabs of liquidity here, sort of the fill of this imbalance. All right, that would have been your entry. And same thing to the lower side, but less of a fill of an imbalance. Yeah, I would say, yeah. I would say that it pretty much from this low, this was your grab of liquidity from these lows here. Okay. As soon as you grab that, that was your entry, but you would have had to sit through this for, you know, up and down type of price action for the majority of the day. All right. And you're pretty much a little bit off of the high of that move. So you would have wanted to take profits somewhere around these highs here, you know, and it does look like price did reach that, right? So you did have a long opportunity here for every time that price did bounce from these three areas here, you could have went long. But we weren't so confident in the movement of the day. A lot of uncertainty still, so we kind of just sat still. And that was the outcome of the first day of trading. So we protected ourselves. We didn't lose money, which is a good thing. There will be days where we do lose because we want to set our stop loss a bit further back because we have conviction in what we're seeing. But usually if we do get very, very, very small wins, like what you see here with this 60-cent win, this is the result of us just hedging our stop loss right in front of the entry point so that we at least take something home, right? This is going to pay for our fees to actually trade, you know, that type of thing. But other than that, guys, this is the classification of what basically happened from start to finish for each one of these trades. Now, what we need to do at this point, all right, is anticipate what's going to happen going into next week. Now, the only way that we can really do this is if we start to draw out some levels on our chart. So as you guys can see, I went back to the hourly chart. We have a naked chart. All right, there's nothing on this chart. Let's actually scroll back out to the daily and show you that all of our levels were taken off of this chart for the most part. There's one imbalance hanging out down here that survived the mass execution of all of my levels. All right, but what we're going to do at this point is sort of start fresh, okay? Because in order for us to show you examples of the levels we're anticipating, what we're looking for, right, we're going to have to start fresh. And what we're going to do is start to outline some things on the charts that we're going to be looking for moving into the future. All right, so let's go ahead and go back down to the hourly, because remember, even though we're going to view things from longer term perspective, right, in the videos moving forward, and usually where we start is going to be somewhere around either the 4 hour or the 1 hour. It depends. Now, if we're fresh on a chart, we haven't done any markups at all, and we're going to be scalping swing trading, okay, we're either going to start on the daily or the 4 hour in order to start to mark up our levels. Now, being that most of our execution is going to be scalping type of execution, because we're looking to take this money as fast as we can, get in and out of the market very quick. Don't sit in positions for long. Don't sit in very long drawdowns. We're going to follow specific rules. If we lose anything more than 1% of our account, and right now that's around $250, we're out. That's our threshold, right? Also, if trade goes against us, we don't like what we see, we're out. We want to see the trade move in our favor right away. Okay, so the outcomes of how our portfolio looks is going to be a result of us being very aggressive on getting out of trades, right? As well as sort of being very aggressive on taking some profits every time price moves to our levels. Okay, it's not about catching the massive move. That's where most traders get lost and confused and stuck at. They're in a long, right? And the price is moving in their direction for 1 or 2 days and everything is good. And they stay in that long, and then price turns around on them. Well, if you're in a range, okay, and you're in a long and price moves in your favor for 2 days, take your profits, buddy, and get out of there and wait for it to give you another favorable move. This is the type of stuff that we're trying to take advantage of here in the market. So if we're scalping, the way that we have to look at it is we're going to be executing our plays on 1 minute charts and above, all the way up to 15 minutes. Okay. But we have to start with a higher time frame perspective. Where do you get that from? The 4 hour or the 1 hour. Okay. Now, what are we looking at on the 4 hour? Okay. You can see that this is the previous Bitcoin all-time high. Price came down, right? So now we're starting to range out here in this little area. And if you look to the left, right, just where that red little dotted line is where price is currently, right? You can trace this back to previous price action, right? Price does seem to like this area when it comes to Bitcoin, okay? So being that we know this and price does range out in these areas, we can anticipate what price may do when it starts to reach the top of ranges versus the bottom of ranges, okay? So right now, what we're looking at is just this range in price action right here, all right? The next area up is going to be here. This range of price action. Next area up is going to be this range of price action. Okay. Now, what is really separating these ranges of price action? If we zoom in a bit, you'll start to see what we always refer to and classify as imbalance. Okay. So for price to go from one level to the next, it has to move very aggressively. Now, these are 4 hour candles. Okay. So within 4 hours, price moved in this very aggressive manner. Okay. And pretty much jumps to a different level. Now, it does this to the upside as well as the downside. And what our job is to figure out where these dividing lines are for these ranges, because once price goes up and breaks market structure, okay, to go to a new level, we want to confirm that by making sure that price breaks these imbalance areas. Not only does it fill the imbalance area, but it breaks above it to a new range. This is how we confirm that we're going back on bullish runs. We're back in the bullish territory. Depends on how fast we jump to each level. But as long as we're stuck in a range, we define the range, we play the range. Okay, so the first thing that we need to do, and we're just going to highlight 2 areas to start off with, okay? And then as the videos continue, we'll have to highlight more and more based on what we see in price, all right? But right now, just based on this range that we have in price action here, okay? Most people will look for these highs here, okay, and these lows to define their range. We're going to define it a bit differently. All right, what we're looking for is the imbalances in the liquidity areas. All right, because we want to understand where price may reach to once it starts to really move to one area or the next. Now, what we're seeing in price action right now is that you do have a range. So what we want to define is what the most opportune draws for price are at the moment. And at all times, right, price is searching for 1 or 2 things, either imbalances in price action or liquidity. So Once we define these things, we'll get an idea on both the bullish and bearish perspective where price may be trying to reach to in order to achieve its objective. All right, so let's just take this move right here. We saw that price did find a floor here, right? Price bounced from here. But what was the objective? Why did price stop here, right? If we think about it and look to the left, you have imbalances here that price filled up very quickly, right? They set them very quickly. They filled them very quickly, right? That's what you call a V-shaped recovery. But why did it stop here? Well, just look to the left. You have areas of liquidity here, okay, that price can grab and start to fulfill orders to the downside from, okay? Now, also, what you have are areas of liquidity to the left side here that weren't touched by this price action. So we have some areas here that we can start to concentrate on. We have areas here of imbalance that we can start to concentrate on as well. So let's start to mark some of these off so that we can at least start to pay attention once price starts to reach these areas, what we should be doing, okay? Now, in order for us to really hone in on this, being that we're on a 4-hour chart, we can start with the 4-hour box, okay? And I can just draw them like this very quickly. And all we're doing is we're trying to identify where the price action is in relation to 3 candles, okay? Now we have a video on how to find these imbalances that will pop up here so that you guys can take a look at how to actually draw this out so I don't have to go through the lesson. But essentially in a 3 candle set, okay, between these wicks, where is the imbalance in price? Basically from wick to wick, is there no touching? So if we look at, let's take a couple of candle examples here. Let's just take this example right here, right? You see how this wick drops down, next candle is created, the next wick comes up and pretty much touches this one. Doesn't have to be exact, but it's pretty close, right? This right here is sort of a fulfillment of this candle here, right? It sort of painted both sides and then kept doing what it was going to do, okay? Now, when you have a very big gap between these wicks, this is what we like to see as the imbalance. Now, starting off on the 4-hour, we're going to have to whittle this down a bit to the 1-hour to get a tighter view of where this imbalance actually is, okay? But you got one right here, okay? There's another one directly below it, all right? Here, to the top of that candle. Now, if we keep looking, I'm pretty sure we can find some more. There may be one somewhere around here. And this is the way that I like to at least outline areas that have been touched, right? So this could have been another one, but you can see price did trace up into this level, right? So we're not going to draw that one. Price traced up, hit that, and then started to come back down. So the untouched areas are the ones above here, okay? Keep going to the left a little bit and zoom out some. There may be one here, but let's just take another look. Just grab ourselves a rectangle, draw it from wick to wick. And yeah, this was also fulfilled, okay? So right now, you have really 3 areas of interest, okay, that we're going to label off. Now, we're going to set also a couple of boxes to the top side here. We're going to take off our magnet to do this. And we do want to color code everything, so we'll show you how we do that in a second. But this little area right here, sort of from the areas of the wicks to the top of that movement, this is an area of liquidity, okay? So let's go ahead and actually pull up our templates. This is the easiest way to kind of outline this for yourselves, guys. You want to get some templates together on Tradingview. They're pretty easy to do. Once you do create sort of the look and feel of what you want, then just right click onto it, save it as a template, and then you should just be able to label these things off pretty quickly, right? So we mark off our imbalances, we mark off our liquidity, right? Now there's another area of liquidity that we may be able to pick up on somewhere down here, okay? And really this is just one big area. So we'll cover our wicks. Now these areas of liquidity are not exact. These are just roundabout levels that we're marking off in price because as we're zooming in and if we're scalping, right? Now we're on a 4-hour chart. When we zoom in, things are going to get very, very, very small compared to what we're seeing now. Okay, so if we were to go to the 1-minute chart, these areas probably wouldn't even show up on the screen. Okay, so if we're on a 1-minute chart and we're scalping, we want to know when we get to these areas, but we're going to lose context once we get into lower time frame charts from the 4-hour, 1-hour charts. Okay, now we have what we need to the upside. Let's take a look at the bottom side. Okay, we're going to take another, and at this point, you can kind of just hold your control and drag what you need down. So there's an imbalance to the bottom side here. Okay, we're going to draw this the same way. We're going to put our magnet back on. Okay, And we're going to drag this to the areas of imbalance on the 4-hour candle. Okay, that's one right there. There's another one that we can use up here. All right, so let's draw one more here. All right, now what we don't want is for our chart to get super messy. So we have to start to close in a bit more and go down lower time frames to get a better or more aligned perspective when it comes to it. All right, so if you guys didn't notice what I just did, I went from the 4-hour down to the 1-hour. Okay, now this is how we're going to tighten this up. The 4-hour perspective, we're going to use that to zoom out as far as we really need to, to get a perspective on where we want to start to scalp. When we go to the 1-hour chart, we're going to use this to tighten up, or sort of tighten these lines up on where the actual imbalances are. So you can see here on the 4-hour, this entire area is considered an imbalance. But if I were to kind of just move this around, this, yeah, I wouldn't say that this is an imbalance, right? But you do have one here. So we can move the imbalance to match what we see. Okay. Let's bring this back over there. And there is one here as well. All right. So we still have two areas of imbalance, but now they're a lot smaller than what we initially anticipated on the 4-hour. Now, what this does is it gives you a larger degree of accuracy in regards to where the fair market value gaps are. Okay. And that's all imbalance is. So if price were to come down here and fill these gaps, okay, then we're starting to think that price is fulfilling something to the lower side. If it's just fulfilling the imbalances, then it should push up from here. If there's more to get, which is could be some liquidity to the downside here for sure. Okay, so let's go ahead and drag some liquidity down here to make that relevant. All right, so just grab this liquidity area here. Okay. Now, this is more of a scale-in type of liquidity. So what we're looking at here is that people could be setting stop losses or entry positions anywhere along this little up move here. All right. But we'll just put liquidity to the bottom side here because for the most part, stop losses, they're sitting right at these lows here. All right. They always say people can see where my stops are. Yeah, guess what? I'm pretty sure that if you're in a trade right now and you're long, you may have a stop loss somewhere around here. Right? If you haven't moved it already to somewhere like here or here, it's very easy to tell where people's stop losses are. Just look for the most recent lows. You'll find them. The computer doesn't need to be a genius to find out where stop losses are. Right? Got stop losses to the lows here. You got stop losses to the highs here. Okay. There's always traders on both sides of the market. So there's always stops for both positions at highs and lows, no matter where the price is. Okay, so just understanding that will give you a better perspective on what we're actually doing here and what we're looking for. Okay, now before this gets too ugly, there is also a very nice area of liquidity to the bottom side and the top side here, but I don't need to draw those, right? I understand the reason why I'm drawing these out here is because if I zoom into a 1-minute chart, 2-minute chart, and price starts to drop aggressively, if I don't have this perspective from a higher time frame, I'm not going to know where these areas are. And I'm going to miss them completely. All right. So what we need to do now at this point is start to drop into lower time frames now that we've been identified both the imbalances and the liquidity areas of where it's sitting to the top and bottom side. Okay. Now when we drop into the 15-minute, now we have a better perspective, right? Now when we zoom these candles out, we're going to be able to get a better perspective on where the imbalances are. And as you can see, from the hour to the 15-minute, it proves true. Okay. The second one down here, not so much, and we can tighten that up if we want to. But if we're seeing it on the 1-hour chart, I would keep it there, even in scalping positions. And the reason why is because when the major moves in price happen, they're not going to happen from, the larger institutions being on the 15-minute chart, right? They take longer term positions. So I don't really adjust my imbalances or areas of liquidity any lower than an hourly chart, okay? The 15-minute is where you want to execute and make your decisions from, okay, and manage your trade from, right? You can even make executions on lower time frames like 5-minute, right, or 1 minute if you're that fast, right, or if you want to see that type of price action. But on the 15-minute, we can see, right? Now, what are we planning for? What are we looking for when it comes to price action? If we're thinking short, we can see a couple of things starting to establish themselves here, okay? You have areas of liquidity to the top side here, this blue area that we'll have to scroll back to see where it originated from, right? But we set this on a 4 hours, so it's a higher level time frame. right? So this should be respected when it comes to liquidity. If price were to push above these equal highs here, right? You have a triple top, 1, 2, 3. Okay. Now, some people may inverse this and say, oh, you have an inverse head and shoulders, so price should push up here. But what we all know is that if price were to reach up here, grab this liquidity, there's something stopping it and pushing it back down from the $40,000 range. Okay. So are we going to get gung-ho if price does start to push up here and snatch this? Not unless it really pushes like these candles here. You see how these candles displaced whatever price action was going on down here. It never came back. That's what we're looking for us to break through these levels, reach these imbalances. Okay, that will turn us more into a bullish type of scenario, especially if we sort of retrace, touch this level and keep going. Okay, that's what we're looking for, because in our reality, some people right now, they're just viewing this blue area. If we were to zoom this out, right, people are viewing this blue area right now as resistance. If price were to break above resistance and then come down and touch it as support, right, then that'll confirm that old technical analysis area for them. But for us, we're looking at this as an area of rejection. Price could snatch these equal highs, grab even more rocket fuel here to push it down. Okay, so you have very even levels of liquidity being set here to the top side. This is sort of the perfect setup for a grab, snatch, and then turn around. All right, plus price has been rallying for the most part without stopping. So you may want to see a retracement somewhere. Now, if in fact you do start to retrace, right, you still have a bullish play, because let's just pull out a Fibonacci here, right? We're going to pull out all of the different things that we're going to be looking at. All right. Now what we're going to do is align this Fibonacci. Let's not do it there. Let's try to put it here, sort of where price angled and then launched from. I want to lay my Fibonacci there just to see what possibly is going on here. So we'll bring it from the lowest point to the highest point there. Okay. And you can see that you start to have some alignment there with your imbalances and your Fibonacci. If I were to bring it down a little bit lower, you still have some alignments here, right? So if price were to come down on a retracement, I'm looking forward to fill this imbalance area here. Just this area here, somewhere around 36 to 37, okay? Looking to fill that and then push higher, okay? If we break lower, then price is going for lower lows, okay? All of this liquidity here, and this is what it's searching for. But to me, right, the only thing that will really push it down there is if you have a lot more sort of hawkish news coming out next week, right? There's some factors that could push price down here. Now, if we're looking to the upside, right, price does need to go and get some of these imbalanced areas over here. Okay, so let's tighten some of these up a little bit. As you can see, these are areas of liquidity, right? Highs, 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 right? Even though this little jump it up area here, you know, it's a consolidated area, still liquidity sitting right above these areas here. Then you start to get to your areas of imbalance. So let's tighten this up a bit, take a look at what's going on to the upside, and then we'll talk about what we're looking for in regards to opportunity. And I think that might do it for the video for today. Okay. So we're on a 15-minute chart. Let's go back to the 1-hour chart to keep our perspective in line. All right. So on the 1-hour chart, got to scroll over a little bit to get to the proper places. So, all right, we're going to leave this liquidity area here because we know that this is not an exact level, right? It's not like once price touches this, it's just going to turn around. But this is the area that we know we need to watch for this area of liquidity. And we could even probably tighten it up a little bit more here, okay? There's highs here that are fairly equal, fairly even table that price should want to go and get, okay? So we're setting objectives for price now. Where is price going to go to, okay? It's probably going to be somewhere in these areas. Let's take our magnet off so that we can have a bit more control over this price action. Okay, so I'm anticipating for this entire area to be grabbed for liquidity. All right, let's also tighten these imbalances up a bit. I think that you have one here. Let's see, maybe here. Yep, that's one. And then we can put one here. This is a very big one here. Now, general rule of thumb, okay, is that the larger the imbalance, the higher degree of chance that price will probably come here to fill it. All right, but when you have very small areas on the 1-hour chart of imbalance, in my opinion, they don't hold as much weight. Even though price is probably going to want to go back there, the one target that we can see out of these two imbalances here that are pretty small is this one here, right? Sitting somewhere around 42. So if price would have come up and fill this area and then turn back down, right, that's another possibility. Just like we were looking to the downside for price to retrace, push up, okay? Looking for the top side to reach and then come back down. All we're looking for price to do is balance itself, and in the process of doing that, it will go and reach for liquidity. Now, depending on which way price reaches first, that will determine the way it will go next, okay? So looking at just this price action right here, okay, we can see that price sets the low, then starts to search for equal highs to the top side. Grab these two, which gives it some rocket fuel, some steam to try to keep pushing up higher. Will it go into these areas of liquidity? Possibly so, okay? May start to jump up into these areas of imbalance as well. But these are the things that we're going to be watching as we start to make moves and positions. So where do we stop? For example, we enter long. Let's say, for example, price breaks this area low to the downside here. We enter long. Okay, where are we looking to get out? Either above these equal highs here or somewhere in this area of liquidity. We're taking profits at each level. We're not just going to let the trade run and run and run and run and run, right? But at least now at this point, we have targets to work from, both from the top and bottom side, okay? The most near to price. If we were to zoom this back out to the daily, now things can start to get a bit convoluted, and as we squeeze in, right, things can start to jumble up together. But we're not playing this from the daily. Okay, we have a strategy for the daily chart, and we're going to show you how we, sort of use the same alignment techniques to set those lines up for the take profit, for scaling and scale out positions, right? It's the same premise, same thing. But what we did, we went from a daily to a 4 hour, found the areas of imbalance, liquidity, down to the 1 hour to tighten those areas up. And now we are playing within these ranges with some fair amount of certainty on where price may want to go. Okay. Now, if price is reaching for a level, okay, it should try to really touch that level before it turns around. What do we see here? Highs that are pretty much on par with old highs into areas of liquidity, all right, that were previously set here. This very even, we call this setting the table. Some of you guys may know this already. When it's even level set here, it's very enticing for price to go and get that, right? So should we be looking for a boost over the weekend for Bitcoin to go to these levels? I would say it's very in the cards, very possible, okay? But on the weekends, we usually sit on our hands because things can get crazy. So unless we see a really good opportunity, we probably will not be taking any trades until maybe Monday or Tuesday of next week, which even then we think is a little bit too early to really go in too aggressively. We are going to be protecting ourselves the same way, but chances are things could turn against us. And these are the type of market conditions where you're ranging out like this and you sort of have the same opportunities to the top and bottom. This is when you're going to start to see, a lot of different things happen, and you just want to be on the right side of it. And it's hard to really know. First day of the trading challenge, I think it's been pretty insightful for most folks. And we'll continue to talk about this, the things that we're thinking about. And if this does help you, right, all of the little things that we're pointing out and what we're looking for, if this does help you, let us know. Hit the like, subscribe button, jump in the comments. We want to interact with you guys and get an idea of what you're thinking as well, right? So I think that'll do it for today. It's your boy Maestro. If we do take any trades over the weekend, we'll let you guys know. But other than that, I guess it's fair start to the beginning of the trading challenge. Look at this. Getting a little price movement, huh? Yeah. It's as easy as that, folks. All right, we'll see what's going on tonight. But it's your boy Maestro. Salute. It's the long and short. Run, Bitcoin. Run. Run. You gotta love it, man. We out of here.